You're probably here because you're wondering, what is a disregarded entity? Well, I'm about to explain it to you in this short video. I'm Ted Sutton, and this is Direct Answers from Corporate Direct. Now, before we get started, please make sure to like, subscribe, and leave a comment if you have any general questions about anything. So let's get to it. What exactly is a disregarded entity? Well, it's an entity that's classified as disregarded for federal tax purposes. What this means is that if you have a business and it's a disregarded entity, its activities are treated as if they're done by the owner. A disregarded entity is a form of taxation, and this form of taxation is very common for single-member LLCs and sole proprietorships. Being taxed as a disregarded entity only applies when you have one owner of the business. And as I mentioned before, this is common when you have a single-member LLC or a sole proprietorship. With disregarded entity taxation, the business owner reports their income and expenses on their own tax forms. Usually this is done on a Schedule C, but it could also be done on a Schedule E and a Schedule F. But make sure to check with an accountant. There are a few benefits to being taxed as a disregarded entity. Number one, you get to avoid the double taxation that occurs with C Corps. In a C Corp, you face taxation at the entity level and then a second taxation at the individual level. But when your business is taxed as a disregarded entity, you're only taxed at the individual level. Number two, being taxed as a disregarded entity simplifies your tax structure, and this can make your life a lot easier during tax season. Number three, it's a great form of taxation if you're a real estate investor and you're the sole owner of your real estate assets. In this case, all the profits and losses from your real estate business would flow onto your personal tax returns. And last but certainly not least, if you're a single-member LLC that's taxed as a disregarded entity, you still get the limited liability protection that the LLC provides. This isn't the case with the sole proprietorship, which is why we recommend staying away from them. However, if you have an LLC that's taxed as a disregarded entity, you still get the asset protection benefits that the LLC offers. So that's what it means to be a disregarded entity. For more specific information, certainly double check with your accountant. But if the disregarded entity is right for you, it can make your life a whole lot easier in some situations. I'll see you next time. Hold on, I'm not done yet. If you're looking to start a business, click the link in the description below and schedule a free 15-minute consultation with us. Also, make sure to check out the Corporate Direct website and subscribe to our newsletter, where we'll send you a lot of good information on corporate law amongst other things. And as always, make sure to like, subscribe, and leave a comment if you have any general questions about anything. I'll see you next time.